$1 million bucks. That's the magic number. It doesn't sound cool to say that you have a bunch of money, so we have this big round number of $1 million with all these zeros to make it look neat and clean. This is where we set the goalpost in the past, and we have the sense of accomplishment and status to be able to say that I'm a millionaire. We think retirement is pretty much guaranteed when we hit $1 million. But now, is it really guaranteed? 20 or 30 years ago, $1 million was a lot of money. Today, it's still a lot of money, but inflation's been eating away at its real value. Is $1 million still the number that we need to be striving for? The problem with having $1 million is that you start to spend it, and then you can't say that you're a millionaire anymore. And then maybe you spend more and more of it, and then you might have nothing left. Luckily for us, there are these beautiful things called dividends, where we can buy shares in companies. Then the companies will send us paychecks every quarter for being tiny little owners in the company. This way, we get income from our $1 million and we don't need to spend our money. Maybe we can even get a little price appreciation out of it. But today, we're only talking about how much in dividends we could get from $1 million. First, I'll ask you to hit the like button and subscribe to the channel. You don't have to, but it would mean a lot to me. Thank you very much. Yield is a percentage of how much income we receive for every dollar we invest. And yield has an inverse relationship with share price. Higher the share price, lower the dividend yield. Dividend investors have a problem right now because the S&P 500 is sitting around all-time highs. The S&P 500's yield is about as low as it's been in 40 years. Today's yield is about 1.2%. For every $100 you invest in the S&P 500, you only receive $1.20 back in dividends in a year. So if we put our $1 million into the S&P 500 right now, we'd only make $12,000 a year, or about $1,000 a month. And that's probably not nearly enough to support us in our early retirement. For a lot of people, it's not enough to cover their rent or their mortgage. But we would have some stability and reliability in our income. With so many different companies in the S&P 500, there wouldn't be any drastic movements in dividends paid out each year. Investing in the S&P 500 could also offer the possibility of price appreciation, but that doesn't do us any good if we don't want to sell the shares and we need the money right now. So if we wanted to live off these dividends, we need to find some way to make some more income. Some companies don't pursue aggressive growth and they find purpose in returning income to the shareholders. Companies like Verizon Wireless, who has a yield of 5%. But we can never risk our entire portfolio on a single stock, so we could look at ETFs that hold a lot of different companies that focus on high yield. These ETFs that return as much income back to the shareholders as possible. The Spider S&P 500 High Yield ETF, which takes 80 of the highest dividend yield stocks in the S&P 500, puts them into an ETF. This ETF has a yield of 5%, much better than the S&P 500. With $1 million, SPYD would make us $50,000 a year, or about $4,000 a month. The average annual wage for Americans is about $50,000 a year, so now it's reasonable to expect that we could live and support ourselves indefinitely with this much money. But this approach would require some discipline. You don't get paid out on a predictable level. The dividends over the past 10 years show a lot of fluctuation in how much are paid out on a quarterly basis. You'd need a budget and watch your spending if all your income came from an ETF like this. Now there's a middle-of-the-road approach that we could take. Companies with a yield not too high, not too low. The Spider S&P 500 Dividend ETF, that has a yield of about 2.7%. So $1 million in SDY would be about $27,000 a year. This isn't a great yield, but it does offer something else that would benefit us over the years. Dividend increases. SDY invest only in companies that have a history of increasing dividends. Your $27,000 this year should increase next year, and you wouldn't even have to reinvest any of the dividends. The 10-year history of dividends shows that in the beginning we had payouts of about 40 cents a quarter. And if we ignore these special dividends in the middle, around 2021, 2020, we have payouts of about 80 cents a quarter. Now, these big payouts around 2015 and 2016 and 18, these are long-term capital gains and short-term capital gains and rebalancing being paid back in the form of income to the shareholders. This is a chart where I take all that out, and this is from 2012 to 2021. We can see a much better steady increase over the years. This is just the dividends from SDY that's paid out. Now, 2021 hasn't paid out their fourth dividend of the year yet, but you can see that this year it'll be at least very close, if not more than 2020. Now, every year isn't higher than the year before because this is an ETF and there's rebalancing and buying and selling of different positions. Another option you have is that you could choose a basket of individual stocks. You could do your own research on your own stocks and choose based on yield and dividend growth and set up your own dividend streams with more predictability. Your dividends shouldn't fluctuate every quarter, and you should see them increase at a steady pace every year, since you won't have to sell or rebalance at the end of the quarter or end of the year. Increasing dividends would also help offset any impact of inflation and rising prices. One other thing that we can't ignore is taxes. We need to pay taxes on all the dividends we earn from non-retirement accounts. Luckily for us, though, most dividends are taxed as qualified dividends at a low rate of 15%. Some stocks like REITs and MLPs are taxed as ordinary income. This is another thing that you need to take into consideration if you wanted to build your own dividend portfolio. So to summarize, bad news is that you won't live a lavish lifestyle of traveling the world, flying first class, or going sailing on the weekend from the dividends from $1 million. But the good news is that $1 million is still a lot of money, and we can retire and hopefully live indefinitely off the dividends. Depending on your age, you may be able to take more risks than somebody else. If you're 85 years old with $1 million, you could probably spend your money a bit more freely than somebody who needs to live off their dividends for the next 20 or 30 years. If you're somebody in your early 30s, you don't need the income right now. You could still work. You could invest in the S&P 500, benefit from the reinvesting dividends and the price appreciation, and at the same time knowing that you have a safety net and you can work in a more fulfilling job with income being less of a consideration. How would you invest your $1 million? Leave a comment down below. If you're still watching, you should hit the like button. You should subscribe to the channel for more videos every Monday. And I want you to have a good day, alright? Justin out.